Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today I'm going to look at the worst stock in my portfolio, and that is TAP, which is Molson Coors Beverage Company. I invested in this stock a couple years ago under the premise of, invest in what you know, and it's turned out to be a miserable failure, basically going down almost from the second I bought it. So we'll dig into that a little bit. We'll talk about the future of Molson Coors, which actually has a few bright spots on the radar. So we'll try to figure out, is there a turnaround story here, or am I going to be just left holding the bag for way too long? I'm also going to share with you the lessons I learned during this whole ordeal and give you some tips to try to avoid the same thing. Reminder as always that my stock picks and projections, they're just my opinion for your entertainment. Please talk to a professional before taking on the risks of the stock market. However, if you do enjoy stock market analysis and personal finance videos, I post about 3 or 4 videos every single week right here on the 40 Finance channel, so make sure you subscribe to keep up with all the updates. And as a bonus, if you're interested in joining my email list, I do have my free 15-minute stock analysis guide, link in the description to sign up for that. All right, so as I mentioned, I kind of followed my heart. Being a big Coors Light and Coors Banquet drinker, I followed my heart on this one 2 or 3 years ago under the premise of, invest in what you know. I used to be a bartender years ago, restaurant management, way back in just after college and during my college days. So I thought I had a grasp on this one, and I really liked Molson Coors' general portfolio, even beyond the things that I drink, was mostly Coors products. But as most of you know, if you follow beer stocks in any way, the craft beer market and most recently the seltzer market have absolutely destroyed domestic beer business, at least for those who do not have seltzer offerings. Then you throw in COVID and the complete shift from on-premise to package sales, and the whole thing's an absolute catastrophe. On the one bright spot though, Coors is sort of reformulating both their business and their portfolio, so there might be some light left at the end of the tunnel. I'll talk about that in a little bit. But the most important thing to remember, and Peter Lynch, who is famous for the quote about investing in what you know, even comes out and says it, hey, it's not just about that, right? We have to look at a ton of different things with stocks. I know that now. I've learned a lot over the past couple years. This was more or less like a fun play for me, but fun it has not turned out to be. So just keep those things in mind as we're going through. There are certain aspects of value stocks and investing in what you know that don't always turn out to be as good as they look. All right, let's do a quick look at my investing timeline with Molson Coors. You see at the beginning of 2018, the stock was actually at $72.30. I made my very first purchase at $71.93. It literally tanked or had a huge drop the next day, down into the mid 60s. So I of course bought more, right? Because you buy the dips and you average down, and you can see I did that again at $62.75 in October of 2018. Then it sort of fluttered around, had more dips. Frankly, in 2019 I was investing in other things, and I was, kind of sour on the initial experience, so I was focusing on other growth stocks that worked out very well for me. But recently here, if you go down to the bottom right corner, as we've run into COVID and a slew of bad news and basically just a lot of negative sentiment with Molson Coors, it's finally reached a point where it's basically half price from what I bought it for. Now there's a good reason why it's half price, but I decided here recently to kind of jump back in, bring my cost basis down, including yesterday where they had some more good news come out, which we'll go into in a second. And I just decided, you know what, I'm going to hold this bag. I'm going to commit. This could be really stupid to do, but I'm going to try once again to average down in the hard times and see if this company can't turn around. Worst case scenario, pick up some dividends along the way, or maybe they even get bought out which would be a win as well. All right, real quick, let's look at where this stock stands today. Price of $33.53. You can see in the highlighted boxes P ratio and EPS. Coors does make profits, but here in these COVID quarters, they've had negative EPS, which screws up calculations on the Yahoo end. But they do have a forward PE of 879. It's a very low PE compared to some of the other players in the business. Rightfully so, though, when you see how the revenue's been trending. Also highlighted down there, this is a stock that traditionally pays a nice dividend, anywhere between, I believe, 2 and 3% off the top of my head. With all the weakness in the beverage market and basically the way the pandemic has changed consumer behavior, they understandably suspended the dividend so that they can focus on optimizing operations. Top of the screen there, you see trailing 12 months revenue of $9.9 billion. The forward PE I mentioned is 879. You have cash on hand of $780 million and a debt load of $9.1 billion. So that debt load is definitely eye-opening to some degree, but you should know that Molson has a pretty decent cash flow, about $2 billion a year. And you can see with the trailing 12 months revenue, which includes some of these down quarters, they certainly have enough money coming through to manage that debt, and hopefully they'll be able to lower it more when things, if things ever return back to normal. All right, so let's talk a little bit more about the bad news for Molson, and then we'll move on to the good news, of which surprisingly there are some good points to be had. The bad news is really what I alluded to earlier, which is just the consumer has changed so much in just 24 months, whether it's craft beer, the seltzer market, and then the pandemic market, which has essentially eliminated bars and restaurants to most degrees. That has really changed how people sell beer. The sales reps that come in, and as these big breweries, regardless of what they're brewing, seltzer, craft brew, whatever, they have a game plan for the year. X amount gets sold to Kroger's and Walmart's and whatever. Then we have to make X amount of kegs because those go to concert venues and sporting events. Everybody's plans got wiped in this market, and really the only public company that's doing really well during this time is Sam Adams, and that's because of their Truly seltzer. And Truly is a packaged product by itself, so it was relatively easy for them to pivot, whereas Molson Coors didn't even have a seltzer brand in-house heading into 2020. They have since added a Coors seltzer brand. They have Vizzy Seltzer, and they have a couple more coming out that the name escapes me. So they were already trying to hustle into a race that they were losing. Then you throw in all this weirdness with manufacturing, transportation, where people buy beer, and where people consume their alcohol, which is mostly at home right now, and it's an epic failure. And you throw all those things together, and you're going to have bottom lines like these where they're not good, right? So the bad news, this is a Morningstar report. Growth per share over the past year, revenue down 1.8%. It's probably more than that because we're only through Q2. You have earnings down 78%, which is not good, of course. Book value dropped. Total stock return minus 40%. That's where we are today. If you look in the middle of the screen, you have the quarterly revenue and EPS trend. And for the June quarter this year, they came in at 90 cents, which, by the way, was infinitely better than the minus 54 cents in Q1. But you see the trend there over the past years, right? So 90 cents versus last year was $1.52. So that was a normal year, right? That was going against $1.96 in 2018. So either way, you had weakness. And when you look off to the right on revenue growth year over year, obviously those bars are going the wrong way. on the bar graph, right? So you basically have two things to think about as an investor, and that is, it's very obvious that the news isn't good, right? And we will have some bright points here in a second, but let's just pretend this is all we know and stop here. The news isn't good. So the question as far as investing opportunity is, A, will the news get better? B, are we at the bottom? So is this an investing opportunity where it cannot get any worse? And then C, do we even think that even if this is the bottom, do we even think that there's recovery? And we'll get into some reasons why I think so here in just a second, but one thing that's going to win right off the board in 2021, right, is getting rid of the pandemic. Getting back to regular restaurant, festivals, concerts, sporting events. That one thing by itself will certainly help Molson Coors recover lost revenue, but that's not growth, right? That's just comping what used to be there, and even that's going to likely be a long tail run. Okay, so outside of just getting back to par, there are some other things that have me, mildly excited on the Molson Coors front. And if you start at the top right here, you might have seen the headline yesterday that Coca-Cola and Coors will work together on a hard seltzer coming out called Topo Chico. This is actually Coca-Cola's formulation, and it's also their branding and marketing. But what Molson has done, and I got to give them credit, is they've offered to help with production and distribution. It's not going to make them as much money as making Topo Chico their own, but they are going to put their factories to use, and they are going to get returns out of this. The second headline there on the left-hand side is they've also partnered with Yuengling. Yuengling is basically a craft beer brand. I think most people would recognize it as a craft beer brand. They've had a lot of success on the East Coast, but they've really struggled to bring things out west. And so once again, similar to Coca-Cola, Coors is going to help with distribution and brewing out on the West Coast. Again, this is not as good as inventing a new product and selling it directly, but it does help you use factory capacity that you may not have otherwise used, and it does add to your portfolio of brands when you're talking to restaurants, concert venues, etc. Now on the right side of this includes some of the things that Molson is doing in-house, right? So they're expanding into non-alcoholic beverages. They have a non-alcoholic seltzer called Huza. I don't know anything about these drinks, guys, so I'm going to leave it up to you. They have also partnered with the beverage company LA Libations, which has some very, let's just say, unique drinks, health-type drinks in their portfolio. So Molson Coors is jumping into that game, and this is on top of new products that they have launching for Coors Seltzer, Vizzy, and some other things coming down the pipeline. All right, so we have epic bad news, but now we can see a couple bright spots in the tunnel ahead. The question is, do the bright spots outweigh the bad spots, right? I will say for me personally, it's enough for me to bag hold, dollar cost average down, and give it another year or two. But I was surprised to see on the analyst front that Molson actually just got a strong buy from Zacks Investment Research. Now, just to be clear, I don't use Zacks Investment Research for anything, and I really don't have much opinion on their quality, but I will tell you they are one of the biggest sort of Motley Fool type stock research websites that are out there. So when Molson Coors got a little nod there, I was feeling pretty good about my choice to kind of average down. All right, so what's the bottom line on what we're looking at with Molson Coors? What lessons did I learn? The first lesson is don't catch a falling knife, right? And that's exactly what I caught with Coors. The price was going down, and I kept trying to catch it at its lowest point. But I also learned that turnaround stories and revenue changes take a lot of time. They're very fragile, and when you throw something like the pandemic in the mix, a house of cards can definitely fall down and leave you hanging with even more losses. I also learned that from a value investing standpoint, that value stocks don't always mean that you're going to win, right? So just because you buy it at a low valuation, unless you have revenue growth or new product innovations, it doesn't mean that stock's going to go anywhere. And that's usually what the market's good at. And that is being able to foresee growth. And so you can buy stuff at a deal, so to speak, but if it's not going to grow or innovate, then it's just going to tread water. And you can make the argument if there was dividends involved, but in my case, Coors actually suspended their dividends. It's going to come back, and that will certainly help with my net loss that I'm sitting at right now, but that's a time-based function, and I'm not expecting dividends to replace all of the money that I've lost so far. All right, so what's my action plan? Well, first of all, I'm probably bag holding through 2022, and I've already mentioned that. Wouldn't be surprised if it gets extended out to 23 or 24. The key for me will be to give Molson Coors a chance to not only comp these horrible revenue numbers from this year, but also to get some of these new products out and partnerships out in a normal world circumstance to see if they can recover some of their lost revenue and lost growth with other ideas. From a cost management standpoint, I'm going to keep poking around 5 or 10 shares at a time. I want my cost basis, which sits in the 45s or so right now, I want to bring that all the way down into, 40 or below. Ideally in the high 30s. It just depends on the day and what kind of news we're breaking out. But I feel like if I can accomplish that this year when the news is, conceivably at its worst, then through both price adjustment or price averaging, dividends, and potentially even adding options trading to trying to squirrel back a few nickels here and there on this stock, it'll be a good experiment for me on long-term investing. Like, can I take this value loser, do the right research, see where they're going, and maybe I can turn it into a winner. It's just going to take time. All right, guys, so there you have it. That's the worst stock in my portfolio by a mile, and that is TAP Molson Coors. Hope you guys enjoyed this video. Please give me a like and subscribe if you did. Don't forget to pick up your free 15-minute stock analysis guide down in the description. We'll see you on the next video.